The broadcast is now starting. All attendees are in listen-only mode.
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today's Thursday, 24th day of July, 2025. Members only workshop tonight, 8 p.m. Eastern. Please have your questions ready. Thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first broadcast is our live training room. So to get in there, you got to be one of our traders or taking the 1-week free trial. If you have not yet taken your 1-week free trial, when Michael comes on at the top of the hour, he'll walk you through step by step how to take the trial. We'll get your indicators up and indicating today. Your trial will officially start tomorrow, Friday, but it'll run all the way through next Thursday. You get 5 consecutive trading days with access to everything, not just the live training room. And there's no credit card required. Now, this is our schedule for each afternoon broadcast. So we're going to dive right in with our daily devotional. And we're starting a new topic today, the solitude practice. Today's scripture is Luke 5, verse 15. And I'm going to share it from the NIV translation. Yet the news about him spread all the more, so that crowds of people came to hear him and be healed of their sicknesses. But Jesus often withdrew to lonely places and prayed. Luke 5, verse 15. Now, this is a 4-day devotional, so this is day 1 of 4. Today we'll talk about the quiet place. What if the greatest threat to the Christian faith today isn't secularism, but distraction? We live in an era where it's possible to go through your entire life and never really be alone. Even when we are alone, we're on our phone, on the internet, or in our entertainment queue. Cal Newport, in his book, Digital Minimalism, writes, "It's now possible to completely banish solitude from your life." How many moments have I missed where God wanted to speak to me or shape me, but I was distracted by my devices? In Luke 5, we just read that Jesus often withdrew to lonely places and prayed. The phrase lonely places is the English translation of the Greek word eremos. But eremos can also be translated as the desert, the solitary place, or my personal favorite, the quiet place. Jesus would regularly disappear out into that wide open space, all by himself, to pray. Luke tells us he often withdrew to the eremos. Now, this pattern has come to be called practice of solitude. To start, let me clarify what solitude is not. First, it's not loneliness. Loneliness is a felt absence. Solitude is a felt presence. Secondly, it's not isolation. Isolation is a movement away from relationship. But solitude is a movement towards relationship. Finally, it's not aloneness. Aloneness is what we introverts love. It's when we're not with other people, but we may be texting people or watching TV or reading a book or folding the laundry. We're alone, but we're not in solitude. So, what is it? Very simply, the practice of solitude is intentional time in the quiet with ourselves and God. Nothing else. One way to think about solitude is a place that is free of inputs. The only inputs are God and your heart laid open before Him. This is why solitude has two companions, silence and stillness. Silence is pretty self-explanatory, but there are two dimensions to silence. Exterior silence, where you silence noise outside of you. It's quiet. But the second dimension is interior silence, where you attempt, and this is easier said than done, to quiet all the thoughts, worries, emotions, and rumblings of the heart inside you. This, in turn, is designed to lead to stillness. Stillness is coming to a place where the troubled waters of your heart settle down like a glassy lake early in the morning, and you're just there, waiting. What I find when I go into solitude is that as I decompress from the overstimulation of the modern world, my body and central nervous system begin to calm. I slow down from all the hurry, traffic, and pathological busyness. And I begin to feel. I'm forced to confront the good, the bad, and the ugly in my own heart. All my anxieties, ambitions, and addictions, it all comes up. All of it is exposed in the safe place of God's loving presence. And in solitude, I hear the voice of God over the din of all the other voices, within and without. I get God's perspective on my life. And often I come to a place of freedom. Success and failure both lose their power over my heart, as does the approval or disapproval of other people. In solitude, it's like I've come home. But when I neglect solitude, I feel distant from God. I feel distant from myself. I get more and more reactive. I lose God's perspective on my life. And above all, I get so tired. I become emotionally unhealthy and ultimately vulnerable to temptation. These are the signs and symptoms of a life without solitude. And to clarify, the eremos isn't just a place, it's a practice. You can practice this in your daily life. Walking to a park down the street from your house, sitting in your backyard at night, or getting up early before your family or roommates are awake. Or like Jesus, by staying up late. How do we make space for God? The same way as Jesus. We retreat, we slip away, and find a quiet place. And there we pray. Do you want to come close to God? Then follow Jesus into the quiet place. Let's pray. Heavenly Father, teach us this practice of solitude, disconnecting from all the noise and voices and distractions of this world. Teach us to do as Jesus did, to draw away from the noise, to be quiet, to be still, and to know that you are God. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen, and happy Thursday. Again, members only workshop tonight, so please have your questions ready. Let me give you the numbers from around the world. We'll start in the U.S. with the cash markets or the indices. Currently, the Dow is down 206 points. The NASDAQ is up 32. S&P 500 up 10. But the Russell 2000 is down 19. That's almost 1%. I suspect that at some point today, we'll see the NASDAQ and the S&P reverse and follow in the steps of the Dow and the Russell. The Russell really has my attention, so we'll see what happens. In the commodity basket, crude oil up $1.01, trading 66.26 last. That's a gain of a little over 1.5%, or basically $1,000 per contract traded. Gold is down $20, trading 33.7670 last. Silver is down 25 cents, trading 39.24 last. In the Asian markets at the close. Now remember, yesterday the Nikkei was up 1,300 points. Well, today it's up 655. It's a little over 1.5%. So 2 great days for the Nikkei back to back. Shanghai is up 23, or was at the close. The Hang Seng up 129. In the European markets at the close, FTSE up 76, the DAX up 66, the CAC down 32. So we had a green day in Asia. It was a mixed day for the UK. And it is a mixed Radio Thursday here in the US of A. Now, as futures traders, we like to see the 4 major indices all the same color. And we had them all green yesterday. When they're all the same color, red or green, it doesn't matter. You get better follow through on your trades. Why is that? Well, it's sort of a lengthy explanation. Maybe we'll cover that on another day's broadcast in a little more detail. But we got the Dow and the Russell in the red, NASDAQ and the S&P in the green. So it's a bit of a tug of war. We'll see who's the winner by the end of this broadcast, if we have a winner. With futures, you can be long, short, long again, all in the same hour. That's what the chart in front of you is telling you to do. So again, whether the 4 major indices are all red or all green, Doesn't matter. We just like to see them all the same color. So let's go to the news. President Trump unveiled his administration's AI policy yesterday. The 23-page framework outlines actions the government will pursue across dozens of federal agencies to promote its AI goals and outpace China on development. The policy broadly seeks to accelerate AI innovation in the U.S. That includes loosening environmental regulations to speed up the construction of data centers. The government will also invest in training efforts for high-demand positions like electricians and HVAC technicians. In case you don't know, that's your friendly air conditioning man or heating man, depending on which part of the country you live in. This past weekend, when we went up north to Greer, Arizona, the hotel didn't even have air conditioning. They had fans. The deal is it rarely gets hot enough up there to need an air conditioner. This is an old hotel that just underwent a $5.5 million renovation. Kind of surprised they didn't slip in some air conditioning. But they didn't, and we survived. In all, there are over 90 federal policy actions that the government aims to take within 1 year. Trump signed 3 executive orders yesterday to kickstart the policy effort. One on fast-tracking permits for data centers, one to promote exporting AI tools to friendly nations, and one restricting federal contracts to AI chatbots the administration deems to be free of ideological bias. It's kind of hard to find right now. Former criminology student Brian Kohberger was sentenced yesterday to 4 consecutive life sentences without the possibility of parole for the murders of University of Idaho students in 2022. He was also sentenced to 10 years in prison for burglary. The sentencing caps a year-long case that has puzzled investigators. In mid-November of 22, the 4 victims were found stabbed to death in an off-campus home in Moscow, Idaho. After weeks without an arrest, police matched Kohberger's vehicle to surveillance footage of a white sedan near the victim's home. DNA on a knife sheath at the crime scene matched samples recovered from Kohberger's parents' trash. Once you put your stuff out in the trash, or drink from a cup and throw it in the waste bin, or leave it on the table and get up and leave, that DNA is fair game. Of course, I know no one in this audience would ever need to worry about that, right? What's interesting is Kohberger was pursuing a doctorate in criminology at a nearby university. He originally pleaded not guilty. He changed his plea earlier this month, avoiding a trial carrying a potential death sentence. He knew he did it. Neither he nor investigators have publicly revealed a motive, despite calls for an explanation by the victim's family members. I watched part of this yesterday, and it really was quite heartbreaking to hear all these family members, because you had 4 students. Each one of them had a mom, had a dad, had an aunt, had a grandma, had sisters, brothers. It took up most of the day. And he still hasn't said why he did it. The United Nations top court ruled yesterday that failing to combat climate change could violate international law. Though non-binding, the opinion asserts a sustainable environment as a human right, laying a foundation for global agreements and future lawsuits. The decision by the International Court of Justice's 15 judges follows a campaign by Vanuatu to clarify countries' climate obligations. The 83-island archipelago in the South Pacific ranks as the 20th most climate vulnerable nation, partly due to rising sea levels and poor infrastructure. Over 130 countries backed Vanuatu. Top polluters China and the U.S. argued existing climate agreements are sufficient. The court said failure to adopt ambitious climate plans would breach international law. The opinion applies to all UN member states and allows developing nations to seek compensation from major emitters for climate-related damages. You know, America is one of the cleanest countries on the planet, and China, one of the dirtiest. I don't know if you've ever been there, but you've seen pictures. There's always this dark haze hanging over it. All the cities. All right, let's see what Wall Street has for us today. Tesla reported a slight earnings and revenue miss in the second quarter after the bell yesterday, and CEO Elon Musk hinted at a few rough quarters amid mounting challenges for the automaker. Tesla reported second quarter revenue of $22.5 billion versus the $22.64 billion expected, a 12% drop compared with the $20.05 billion reported a year ago. Tesla posted adjusted earnings per share of 40 cents versus the 42 cents that were expected, with operating income coming in at $923 million versus the $1.23 billion expected. And Tesla is down over 9% on the day. Tesla's revenue from the sale of regulatory credits fell to $439 million from $890 million a year earlier, and will continue to drop following passage of the One Big Beautiful Bill Act. Musk spent months blasting the bill, but Trump signed it into law earlier this month. Again, Tesla's down $30 or a little over 9% as we speak. As we already discussed, stocks have traded mixed today as hopes for a US-EU trade deal kept fresh records in sight, and Wall Street assessed earnings from tech giants Alphabet, Google, and Tesla. The Dow dropped 0.3%, pairing earlier losses amid a post-earnings slide in IBM shares after the blue chip index ended Wednesday just shy of its first record close this year. Meanwhile, the tech-heavy NASDAQ composite rose roughly 0.1%, while the S&P climbed 0.2% on the heels of more all-time closing highs. And yesterday we talked about we had a new all-time high. The question is, would we have a new all-time closing high? And we're trading even higher today, so we'll look at that as soon as we go to the charts. Renovations at the Federal Reserve are set to get a high-profile probing today when President Trump and his allies visit the central bank's headquarters after weeks of mounting criticisms over a $2.5 billion renovation. Trump is set to arrive at 4 p.m. Eastern in a highly unusual presidential visit to the building on the National Mall less than a mile from the White House. The construction site tour is just one of numerous political pressure points being put before Federal Reserve Chair Jerome Powell by Trump and his team, even as the latest rhetoric from the President and Treasury Secretary Bessent has downplayed the chances of any imminent attempt to fire the central banker. In 8 months, he'll be out, Trump said on Tuesday, with Bessent adding yesterday in various television appearances that we're in no rush to change leadership and that a new chair nominee would be announced in December or January. In short, Powell's job is looking slightly more secure this week, but the central bank's chief problems clearly are not going away. Now, the housing numbers this morning are a reflection of Powell's fear of lowering rates. Yeah, but it's more than that. President Trump set a new rhetorical floor for tariffs last night in comments that have been backed up by recent deals. Taken together, the moves suggest that his administration is aiming to make 15% a new minimum rate for tariffs worldwide. That's an increase from current 10% duties in place on much of the world and comes after months of trade negotiations that saw American trading partners searching for ways to lower rates to little apparent avail. Although Japan, they struck a deal, and they're investing $550 billion in the U.S. That got them a 15% tariff. And when we export to Japan, no tariffs. Bloomberg, Microsoft said a Chinese hacking group is exploiting security vulnerabilities in the company's SharePoint servers to deploy ransomware following a cyber attack discovered last week that has affected hundreds of entities around the world. The group, which Microsoft has named Storm 2603, has a history of waging ransomware attacks which use malicious software to lock down computers and render them inoperable. Ransomware groups usually then demand payment from their victims to unlock the computers. And the sick part is sometimes they do this to hospitals. Microsoft said in a blog post last night that it was moderately confident that Storm 2603 was a China-based threat actor, but the company said it was unable to confidently assess the threat actor's objectives. Storm 2603 is one of 3 alleged Chinese entities that have exploited the security vulnerabilities in SharePoint in a widespread hacking campaign that began earlier this month. Now, you might be thinking, well, I'm sure glad I don't use SharePoint. But you got to play the tape all the way to the end and ask yourself this. What large companies that I do business with, that I regularly log into their websites, maybe your bank, maybe your insurance company, maybe whoever, if they're using SharePoint and they've been affected, even though you're not running SharePoint, guess what? You just got infected too. It's a real problem. So if your computer locks up on you, I'm not sure what Microsoft wants you to do about it. I guess they're just letting you know. It's a big problem. The Federal Reserve got a new legal headache today when a money manager sued Chair Jerome Powell and other central bank policymakers in a Washington, D.C. federal court. The lawsuit alleges the Fed is violating a 1976 federal law by keeping its monetary policy meetings behind closed doors. Azoria Capital's lawsuit asks the court to issue a temporary restraining order compelling the Fed's Federal Open Market Committee, the FOMC, to open its deliberations to the public starting next Tuesday and Wednesday. We get the Fed announcement next Wednesday. So what they're trying to do here is we never know what gets said on Tuesday. Now, when the statement is delivered on Wednesday and then the chair, Jerome, reads his prepared statements and then takes questions from the audience, that's supposed to let us know, what really happened on Tuesday. But this lawsuit says that we should have access to everything that's said on Tuesday, live in real time as it happens. You've got that pressure, a lawsuit in federal court, and the fact that the president is going to go take a look at this $2.5 billion. And he's a builder. He's been building all his life. It's what he did. He's going to see for himself where this money has been spent. We got econ numbers this morning, and sales of new U.S. single-family homes increased less than expected in June. Why? Higher mortgage rates, pushing inventory to levels last seen in late 2007, which could keep home building subdued. New home sales units rose 0.6% to a seasonally adjusted annualized rate of 627,000 units last month. The sales pace for May was unrevised at a rate of 623,000 units. Economists polled by Reuters had forecast new home sales, which make up more than 10% of U.S. home sales, would rise to a rate of 650,000 units. New home sales, which are counted at the signing of a contract, are volatile on a month-to-month basis and subject to big revisions. So we can expect that number to be revised. The European Central Bank policymakers are setting a high bar for an interest rate cut in September, and they would need to see a significant deterioration in growth and inflation before backing further easing. The European Central Bank left interest rates unchanged today after cutting 8 times in the past year, biding its time while Brussels and Washington try to negotiate a trade deal that could ease persistent uncertainty over tariffs. It's one more reason the EU needs to cut a deal. And last, from Bloomberg, gold slipped as the latest U.S. jobs report, which came out this morning, pointed to strength in the labor market, reinforcing views that the Federal Reserve will keep interest rate policy on hold for now. In other words, next week, don't expect a cut. It's interesting how the Fed will use those kind of numbers to make their case, but when the numbers don't agree with their case, they simply dismiss them. Kind of doesn't seem fair, does it? But hey, we all know life's not fair. No one ever said it would be. Logic 247, our 24/7 around the clock E-mini alert service. It's not just the E-minis, it's also crude, gold, and silver. We're currently in week 364. Over the last 364 weeks, we have issued over 20,130 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on simple market structure and a simple process we teach all of our passport holders. Valerie did the recap this morning at 7 a.m. Eastern. At the time of the recap, and I've not put out any additional alerts because we still have 17 waiting. But at the time she did the recap and current, Since the markets opened this past Sunday night at 6 p.m. Eastern, we've put out 61 Logic 247 alerts. Still waiting on the outcome of 17. That gives us 44 actionable alerts, of which 6, or 14%, would have been stopped out. Again, based on simple market structure and a simple process we teach all of our passport holders in their one-on-one mentoring sessions. 14%, I think, is the highest number we've seen in a few weeks. Last week we ended with 8%. But again, over the last 364 weeks, the average has been 20% or less. So we still have the rest of the day and tomorrow to see where we end up for the week. Now, the logic alerts can come out anytime around the clock. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. Every logic alert has an entry price, long or short, an initial target that's designed to help you get your goal for the day, and then often additional targets, and always a final trade to target. If it's a buy alert, the final trade to target will always be the weekly trading zone above, and if it's a sell alert, the final trade to target will always be the weekly trading zone below. The true purpose of the logic alerts is to help you learn how to read a chart. If your goal is to learn how to trade for a living, you gotta be able to read the chart. And there's no words, no sentences, no paragraphs, no punctuation. So learning to read that, it's like learning a new language. Now, 364 weeks, that's a long time. But years before we introduced Logic 247, we had our original alert service, the concierge trade alerts, and they're different. Number one, they don't come out around the clock. They're typically posted 5 minutes ahead of the Globex open, like they were Tuesday and Monday. And Sunday I was running late because I just got back from a little mini vacation. But last night I waited because I wanted to see if there was going to be any gaps based on the earnings that were reported after the bell. So last night, instead of coming out 5 minutes before the open, they came out 48 minutes after the open. For those who don't know, the Thursday session, which we're in right now, began last night at 6 p.m. Eastern. So all of our traders and trial members had all of these targets 48 minutes after the market opened. S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. If you are one of our traders, make sure you read this information and understand it. If there's something you don't understand, ask so we can clarify it for you. So let's go to the charts, where we have a new all-time historic closing high yesterday. Yesterday we closed at 64.07 and a quarter. And today we've put in a high at 64.15 half. So let's see how close we can get. $64.15 and a quarter. And the high is come on. Wow. Yeah, so we're only off by one tick. The high is 64.15.5 so far. But we're creating a doji right now on the session. If we were to close right here right now, one, we'd have a doji, which is indecision, and some might call that dark cloud cover. Me, not so much. Now, the green line's called the BBC, stands for bull bear cross. When price crosses below the green line, like it did back on February 21st, we're bearish and expect lower prices. When price crosses back above the green line, as it did on April 24th, we're bullish and expect higher prices. Price always reverts to the mean. In our case, the mean is green. We call it the BBC. And you'll notice that the pullback to the BBC holds more often than it doesn't. Once we crossed above, the first pullback held, and the second pullback held, and the third and the fourth. And are we well overdue for a pullback? Yes, we are. But we've got blue and climbing here. The step line has crossed back to the left side of blue and climbing. Now, when the black step line crosses blue and climbing, you expect a retracement to the BBC. But back on this day, the BBC was lower. See, as long as we continue this sideways consolidation, and it kind of looks like we're breaking out to the upside, the next major obstacle would be up here at the 100% fib extension, 65.85. So we have quite a ways to go before we get there. So these are the retracements. Now the shallowest possible fib retracement right now would be 60.52/53. And everybody would think the world's ending, but it's not. It's how markets work. In fact, markets need healthy retracements to re-energize and build that next leg. So I think we're starting to, yesterday was quite a strong day. Let's see, the closing price, what was it? 64.0575. And the high of the day, 64.07 1/4. So we closed just a wee bit off the high of the session. We have a slightly higher high today, but what a quiet day compared to yesterday. The daily chart is important whether you trade stocks, futures, crypto, Forex, ETFs, because institutional traders, the ones who move price, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has everything to do with account size. So I encourage you, spend 2 minutes with the daily chart of whatever you're getting ready to trade on the smaller time frames, and get a free look at what the deep pockets are doing, or see if there's confusion. Not only do you get a free look over the shoulder of the deep pockets to see what they're doing, you're also able to identify major areas of support and resistance weeks, months ahead of time. And that's very important. You got to learn to think in multiple time frames. And you always got to keep the big picture in mind, because the big picture dictates what's going to happen on your smaller time frames. The ES, okay. All alerts, both the logic and the concierge trade alerts, are created on the 30-minute chart. The vertical line separates today, Thursday. Back here's Wednesday. Back here's Tuesday. When price rallies up to a weekly zone, we expect resistance till proven otherwise. And when price drops to a weekly trading zone, we expect support until proven otherwise. Now this pullback here traded through the BBC. We opened here and closed here. That was an opportunity for the market to head lower. But buyers saw it as a buying opportunity, and we got a leg and a retracement, a leg, a retracement, and then we closed just off the high of the session. This was the opening candle last night. True to form, price opened, rolled sideways. Once you have blue and climbing above price, it becomes potential resistance because it's probably on its way to becoming red and falling, which is bearish. Obviously, blue and climbing is bullish, red and falling is bearish. Took us down to the BBC, but the pullback held. So we got a leg and a retracement, and the pullback held. Leg and a retracement, and the pullback held. A leg and a retracement, and the pullback held. We hit the long target here, and then we traded slightly above it. Then we came back to the BBC, and now pullback is held so far, but we got potential resistance overhead. Blue and climbing and the black step line are both directly above price. So if buyers maintain their bullish stance around 64.07, 64.08, expect potential resistance. Now, price could trade right through it, but you should be prepared. In other words, if you're long this move up, you should either have your target set just before that, or you should be trailing your stop very closely. The Dow, which was down quite a bit on the session, but it has recovered a little bit. Come on. All right, doesn't want to move. What'd I do? The Dow, 44,945. There we go. All right. So here was the open last night. Came down to the BBC. We didn't make it all the way to the BBC. The low came in right along this area right here. We overcame red and falling briefly, only to come back to the BBC, consolidate. We caught a drop. Now this low here basically lines up with this low here. This is some rather difficult trading, okay? We're not getting nice sweeping moves. We're just, the doji that you saw on the ES, the bellwether, that's reflected in this right here. We did finally get a drop down to the short target, and the lows are basically this low from yesterday. This target was based off right here, where the step line crossed blue and climbing. That's an important price, important area, but price traded right through it. Found support, made it back up to the zone and the BBC, and the pullback held. You're like, well, no, wait a minute. These candles are above it. Yeah, but they're still touching it, every one of them. That means it held. This was a green candle all the way up, but by the time the 30-minute candle closed, so as long as it's touching, the pullback is holding. Now, you see how blue and climbing has gotten directly above price? That's what I mean by it becoming potential resistance. And you see how it's starting to kind of hook over? It could well be on its way to turning to red and falling? If so, that's going to send price back to the short target and potentially back to the lows of the session. The Russell, and this is the one I mentioned earlier that I was concerned about. The Russell does not always lead the other indices, but sometimes it does. If I had to pick one that led more often than not, I would go with the Russell. But you can't build a strategy around that because it doesn't happen enough of the time to make it a strategy. But observing it can help you tremendously. There's a difference between being observant of something and trying to turn it into a strategy. So this was the opening candle right at the zone. Now these are the zones that were published Monday morning at 6:15 a.m. Eastern. Yesterday we can see them doing their job here, support, support. We peaked above this zone yesterday afternoon, but by the time we closed, we were back below it. We still have one more zone overhead. I don't think we're going to have to worry about that this week. We get below the BBC, we get a retracement, and then we hit the short target, consolidate. We're below the BBC, we've got red and falling, chasing price, and price continues to drop. We hit the zone, caught a bounce. When price drops to a zone, we expect support like this. When price rallies up to a zone like this, we expect resistance. That. So now we're consolidating at the zone. So if we look left, I would look for potential support about 2266, and then again around 2260, and then before you know it, we're at the next zone, 2257, and there's still 3 more short zones below that. So we'll see what happens. This week has not been textbook trading by any stretch. Here on the NQ, you can see the zone acting as support and resistance. More resistance, support here, then to resistance. Now, one of 3 things happens when price encounters a zone. 70% of the time, it's going to be this, consolidation. 20% of the time, it'll be this, rejection. 10% of the time, it'll be the slice. That's when a 30-minute candle slices through a zone like it's not even there. So we opened last night. Now, blue and climbing was above price, but it was also above the long target. So price ran up there, hit that target, ding, ding, and then retreated pretty quickly. Now, this target, this is Thursday, this is Wednesday, this is Tuesday, this is Monday. You see right there where blue turned to red? That's the long target. Look at the horizontal line on my cursor. And we hit it, and not to the tick. We got up to 23,422 3/4. So we missed it by a couple points. We come back to the BBC. We consolidate sideways at the zone. That's what happens 70% of the time. Then we attempted a move lower. Now this zone is 295/296. And the low of that candle was 98 1/4. So we missed it by 2 1/4 points. Again, these are the zones that were published Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. So we're just kind of meandering sideways. And that goes back to this doji on the daily. The market has no real direction or guidance. Here's crude oil. We opened here last night, ran up to the zone, found resistance. sent us back to the BVC support, back to the zone resistance, back to the BVC support. Then we ripped right through that long target. And this high here, this first high, look at the horizontal line on my cursor. Thursday, Wednesday, Tuesday, Monday, we had a double top right there. See it? And you see that high today? Market has quite a memory. Resistance sends us back to support. Now, when we rip through a long target like that, on the pullback, we'll often find support at the top of the long target, as we did right here. That sent us back up to the zone, and we missed it by 3 ticks. Resistance sends us back to support at the BBC and the top of the long target. Support sends us all the way back up to the zone. Resistance. Now, I don't know what news has come out, but crude is taking a big drop. There's potential support right where we're at, right here, right now. See this low right here? If we trade through that, then the next major area for support is where this bullish cross took place. That's when the blue line gets above the green line. When you have a bullish cross that leads to an extended move, the first time price revisits that area, we'll call it 65.15. That should be good support. At least the first time down. Should be good for a bounce. Now, if we come back at it a second time, we may trade through it. Then we've got potential support at the zone. And then right here, the short target, which aligns with these lows right across here. All right, we'll pick up with gold when I come back. Michael's going to give us a recap of what happened in the live training room this morning. Do a little live trading on the TradingView platform. Then I'll come back. We'll look at gold, we'll look at silver, and we'll wrap things up with our good word for the day.
Excellent. Here we go. Can you see my charts? Looking good.
Hang on. Let me do it. Yep. Looks good.
Okay. Good. All right. Let me just check and see who is in here today. All right. Here we go. Good afternoon, everyone. Today is Thursday, the 24th day of July, 2025. If you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. Just click on that purple button. And when you do, you'll be going to this registration page, which is going to change tomorrow. Go to this registration page and just fill it out. Right? Put in your name, email, phone number. Down here at the bottom, make sure you give us a TradingView login ID. Right? If we don't get that login ID, we don't know that you took, well, we won't be able to enable the indicators for you. Right? If you don't hit join webinar, well, it's, if you don't, this is not going to say join webinar, I promise. But if you don't hit whatever it says down there, then we won't know that you took the trial. So you got to make sure you hit that. All right. And make sure you give us the TradingView login ID. Okay. Okay. And our best day of the month today. We didn't get anything on the ES. We had one trade that was a break even on the ES. But we had our best day of the month by $295, it looks like. So, oh, no, sorry, it wasn't $295. It was $255. Anyway, today, as I said, is the 27th day of July, 2025. We're up 238 ticks on the NQ. That's our best day on the NQ in a little over a month. We were minus 25 on the Russell. And that's our worst day on the Russell in a little over a month. And we're up 50 on the gold. And I think that's our best day on the gold in, you guessed it, a little over a month. Right? And on the ES, we had nothing. We had nothing one other day, 2 other days this month. One there and one there. So the ES is not a significant difference. All right, so anyway, we were up 238 on the NQ, minus 25 on the Russell, plus 50 on the gold, and break even on the ES. $1,565. Took 11 minutes today. Now that was kind of broken up. I did 3 minutes and I lost my connection, and then I got it back, and then I traded a little bit more and finished up the other 8 minutes out of the 11. To get the goal for the day, it took 4 trades, and that put us at $1,100 when we closed out that. We had 2 trades actually that did it. We were plus 2 on the Russell, I think, and I don't know how we ended up with that. I think we ended up with it this morning. It was plus 2 on the Russell and plus 10 somewhere else, I think, is what it went. What we ended up getting. Yeah, I know what it was. We got 5 on gold and then we got another 5 on gold. So we had 2 on the Russell and 10 on gold. That's how we ended up there. All right. And we took a total of 28 trades this morning. So on the month now we're at $14,240 over 17 business days, averaging $837 per contract per 2-hour business day. On the year, $169,705 over 126 business days, averaging $1,346 per contract per 2-hour business day. Now, if you were to quit trading when you get the goal for the day and you were to add 1 contract per month so far this year, you would have only had to work 15.75 hours, and you'd be up $80,367. Okay, that is what you'd be at 7 contracts right now. You'd be adding 1 per month. Right, 1 per month. You'd be at $80,367, averaging $5,102 per hour. Okay. Okay. Now, let's get into the actual trades. Okay. Let's just do our 1 trade on the ES. Okay, get that one, knock that one out. Here it was right here. This was our 1 trade on it. This is the whole ES right here. The whole morning on the ES is right here. You know, on the 7 range, you can see the whole morning in like the screen. There was not a lot of activity. I've got to break even on this trade, and that was it. Was there another trade in here? No, there was no trade in there. I'm just looking to see if I missed anything. I would have been looking for a long trade, but it would have been, nope. I didn't miss anything. We only had 1 valid trade this morning, which is really unusual, but still, that's the way it worked out. That's the way it worked out on the ES. Okay, now we'll start with the gold. Gold is where we eventually got our goal for the day after the 4th trade. This is the whole day in gold. All right, we started out here. We got to break even on that, and then I lost my connection, and Dwayne was going over the news events that were coming out and stuff like that, and then I picked my connection back up, and right here we got 5 ticks. Put us at plus 5. Then we had to break even, and then there's something missing in here because we had a break even over there. Then we had a plus 5. Then we had a break even, another break even. Then it says another plus 5 to get us to 10. Then plus 20 to get us to 30. Then a plus 10 to get us to 40, and then a plus 10 to get us to 50. So there's a plus 5 missing in here somewhere. This is where we ended up getting the goal. So there's one right in here somewhere that's missing a plus 5. Anyway, that's where we ended it. So during the break, you'd be looking for a long trade coming out of the oversold, but this is not one because that didn't make it into the overbought. So, you know, just the long trades coming out of the oversold closing above the midpoint would be right there. But because this one didn't make it into the overbought, that one doesn't matter. So then you flip back down and you have this right here. This would have been a short trade. Yeah, that would have been a valid short trade right there. We've been really close to stopping you out before it went down. The next one, there wasn't a next one. That was it. There was 1 trade. And that was it for the gold. We ended up with plus 50 on gold. So we had 1 really nice trade on gold, 1 20-tick trade. I think it was this one. It's 20 ticks right there. That was a good trade. Nice big one. The Russell, we struggled with the Russell today. I did make 1 mistake on the Russell. And I had a chance to get out of it and break even, but I didn't. So I made 2 mistakes on Russell. We started out with a plus 2 on this trade, and then we stopped out right there, minus 15. Now, the reason that was a mistake, I'm sorry, we had minus 15. That wasn't a mistake. That was a correct stop out. We had stopped out right there, put us at minus 15. That was actually put us at minus 13. It was a minus 15. This one right here, I did the math wrong and I entered too high. So I entered in this one. It never should have been an entry. I entered up here. I think it was 5.5. I think so. I entered right there. And I should have had my sell stop limit below that bar. So I messed that one up myself. And I did have a chance to get out of it at break even, but I didn't. And it ended up stopping me out. I really thought it was going to close down and give me the trade, but it didn't. It stopped me out. And so that was minus 15 there. Got me to minus 28 overall. And picked up 16 ticks on that. Got me to minus 12. I think, is that right? Yeah, 16 ticks got me to minus 12. Then 2 ticks to get me to minus 10. Break even. And then I stopped out again. That put me at minus 25. And that's where we ended it on the Russell. During the break, let's see. You want flat spots with a midpoint, and you want to come onto the overbought. Right here would be one. Right here. Well, yeah, this would be a trade. It hit the midpoint and it gave you a down close. That would be an okay trade right there. The next one where it came out of the overbought was there. That was too high. The next one where it came out of the overbought was right here. That would have been a trade right there. Probably would have been a break even. Didn't pull back enough to give you the stop out, but right in here, you probably would have had a break even. Maybe locked in a little profit. The next one where it came out of the overbought was right here. That would have been okay. It would have pulled back pretty deep, but it would have been okay overall. The next one was right here. So you see what I'm looking at? Just for you guys, I'm looking down here first, all right? Because you're not going to have a trade. If you're below the YBR, you're not going to have a trade until it goes into the overbought. Okay, so if you're below the YBR, this is what you need to focus on. When's it going into the overbought? And then, see, you're below the YBR for a long period here, longer than normal, really. And then it's still below the YBR. Well, this is going to flip it right here. This is finally going to flip it right here. But the first thing you look at is this, right? You see that you're below the YBR. You know that you're below the YBR. So in here, excuse me, you have, I just thought of something I can make part of the TIQ context. I can make a background color part of the TIQ context. Okay, think about that. But in here, when you below the YBR and price goes into the overbought, then you have to check where you are with respect to the midpoint. Okay. So if you get up here into the overbought, you below the YBR, are you touching the midpoint? No, no trade. This one right here turned out to be nothing because it didn't go into the oversold, so you can delete that, right? The next one, you get in here, right? You get into the overbought. Where are you with respect to the YBR? And I'm sorry, the midpoint. Right here where it goes into the overbought, where's the midpoint? Right? That's what you got to ask yourself on every one of these. When it goes into the overbought, where's the midpoint? Right? Every time it goes into the overbought, you got to say, where's the midpoint? Right? And that's what you have to ask yourself. And if I'll go through every one of these with you. Okay. So for those of you guys who are watching this right now, and those are the guys that watch it in the morning that aren't here right now, they're missing out because I didn't do this morning. Let's see if I can do it tomorrow if I remember. We're going to be in partners again tonight. But here's where you were below the YBR and you went into the overbought. Are you at the midpoint? No. Okay, no trade. Are you at the midpoint? Yes, the down close is a trade. Are you at the midpoint? No, no trade. Are you at the midpoint? Yes, the down close is a trade. Are you at the midpoint? Yes, the down close is a trade. Are you at the midpoint? No, no trade. Now, this still could be a trade when it comes out right here because it went up above it and it came out. So that did end up being a trade, but this particular bar right here wasn't going to give you a trade, and the next one wasn't going to give you a trade. The next one could have. If it would have closed down, that would have been a trade. But back here, there was one where I said no because it was not at the midpoint. This one right here. The next bar right here closed up. If the next bar would have closed down, that would have brought it out of the overbought. That would have been a trade. But it didn't close down until right here, and it was above the midpoint at that level. So that was no trade there. Okay. So as we go through them all, you can see what you have to look for. Right here, not at the midpoint. So no immediate trade. You have to wait and see what happens. Nothing. Not at the midpoint. No immediate trade. At the midpoint, the next bar could be the trigger, but it's not. Not at the midpoint. No immediate trade. not at the midpoint, no immediate trade. The next bar wasn't the trigger. The one after it was. This right here was a valid trade right here. Okay, that didn't go anywhere, but that was the valid trade. Do you see that? I have to remember to go. I'll go over this tonight in the partners meeting. And well, anyway, that's what we ended up with on Russell. Ended up with minus 25. Okay, but during the break, I just showed you there were a bunch of trades here during the break that were valid. This one right here was a good trade. That wasn't. That was an okay trade. This was an okay trade. Was it an okay trade right there? It was an okay trade. That ended up working out. This was an okay trade right there. That ended up working out. That was no trade. That was no trade. That was no trade. That was no trade. And that would have been a stop out. So that's how the Russell ended up working out. Okay. Do you guys see that? I'll go over that in detail tonight in the partners meeting. I won't take everybody's time right now. The ES, we already went over the ES, and the NQ is the last one. Okay. On the NQ, here we go. On the NQ, our first trade on the NQ was a stop out. We're at minus 25 at that point. This is where we got the goal for the day. This is when we got the goal for the day on. I remember it now. It wasn't on the gold. It was on this NQ. We got 45 ticks on that NQ. And by the time we got it, it was 9:47, I thought. Maybe it was 9:45. I don't know. But we got 45 ticks, and that put us at plus 20. That's where we got the goal for the day. Then the next trade here, we picked up another 45 ticks. That goes to 65. Then we picked up another 45 ticks. 35 ticks. 34 ticks. I'm sorry, 34 ticks. It got us to 89. Then went from 89 to 134. So we got 45 on that. Then we went from 134 up to 138. So we had 8. Then we had a break even. We went from 138 up to 170. And then we went from 170 up to 202. Then we had a break even. Then we went from 202 up to 220. And I'm sorry, I went to 206. 202 up to 206. Then went from 206 up to 238. And then we had a break even. And that is where we ended on the NQ. Now, if I go through the same exercise about, let's see, where I'm going to write something that shows a background color when you're above the YBR and when you're below the YBR. You guys like that? I think that'd be a good addition. So you can just do it like this and say you're above the YBR. You have the right background color. Below the YBR, you have the right background color. You're above the YBR, you're below the YBR. I'll write that. I'll try to write that today. So it'll be in addition to the partners meeting today. All right. So I was saying that because if you're in here right now, you don't know if you're above or below the YBR, but right here we'll say in this period from here, right here is where we got below the YBR. Okay. And right here, you went above the YBR. Then right here, you went below the YBR. Okay. So everything before this is all above the YBR. Okay. Now I'm saying that because I want to go through that same exercise. When you have this, when you're above the YBR, you're interested when it goes in the oversold, right? Goes in the oversold, you want to look. Goes in the oversold, you want to look. Goes in the oversold, you want to look. Goes in the oversold. Goes in the oversold. I missed one. Oversold. 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 Now this one doesn't count because it didn't make it into the overbought. Then it flipped everything down right here, right? So then you'll go looking the other way when it goes into the overbought. And this one doesn't count because it didn't make it into the oversold. So that's the last one for the overbought. And then it flips it the other way. So now you're looking for when it goes into the oversold. Right there. Okay, you guys following along with this? This one didn't make it into the overbought, so it doesn't count. And then it flips it back down. So you're looking the other way now. Oops, that's off by one. All right, so now if we bring price back down over here, you're above the YBR. So you look to see where it is with respect to the midpoint. Nowhere. So no trade in there. This one was at the midpoint, but the next bar closed below the midpoint. So nothing there. This one was a good trade right here. It hit the midpoint, the next bar closed above it. So that's a trade. This one right here, it hit the midpoint, the next bar closed above it. So that's a trade. Both of those worked out. This one did not hit the midpoint, but the next one did and closed above it. So that's a trade. That worked out. This one hit the midpoint and the next one closed above it. That's a trade. That worked out. That's 4 in a row right there. That worked out. This one hit the midpoint, but the next one did not close above it. And one after that closed below it. So that's not a trade. This one didn't hit the midpoint. The next one did, but it didn't close above it. The next one did, but it didn't close above it. The next one closed above it where it finally came out of the oversold, but it was below the midpoint. Not a trade. Now we're below the midpoint, right? So right here, nowhere near the midpoint. This one didn't hit it and it closed down. Not a trade. Nothing after that was a trade. This one hit the midpoint, but the one after that didn't. When it finally came out, it was above the midpoint and it had flipped the YBR, so not a trade. This one right here actually went down, hit the midpoint and closed right there on it or above it. So that would have been a trade right there. So that's 5 good trades, 5 or 6 good trades right now. This one didn't hit the midpoint. The one after it didn't either. The one after that did, and the one after that had the up close. So that would have been the trade right there. That would have stopped you out. Going a little further over here, by the time you came out of the oversold, the overbought, you had nothing. The next one over here, when it came out of the overbought right here, it was above the midpoint, so no trade there. This would have been a trade right here. Hit the midpoint, the bar after closed below it, so you would have entered right here. You would have stayed in it down to here. Then the next one right here went into the overbought. The next one hit the midpoint and closed back down below. So out of all those trades, looks like there were 7 wins and 1 stop out. Right? You guys following along with this? That's what you have to do. That's all you have to do. Right? And during the break here, I'll try to write the code for the context to show, to be part of the YBR, to be a checkbox. I'll show the background color for the YBR. Okay? and that way, if you choose to use this type of midpoint setup, then you'll have the right color YBR. And you have the background color for the YBR. You won't have to actually, you'll be able to look at it this way. It'll be obvious to you. Okay, I'll build that in. All right, so on the gold right now, we are below the YBR. We're in the oversold. It's going to take a couple bars to get back up here to the point where we might consider selling it. We just reset the midpoint here on the Russell because we came out of the oversold. We're above the YBR. That's going to have to go up and come back down now. Same thing here with the ES and the NQ. So the NQ's already gone up. And so now the NQ's got to come down and go back up to give you a trade. But these right here, because they reset the midpoint, they need to go into the overbought, then come back down to the oversold, and then go back up again, right? So a bar up, then 2 bars down, then another bar up. Okay. That's right. I mean, when I break it down like that, Bob, it's pretty simple, right? Isn't it? If I break it down like this is what you need to focus on, right? Once you got that part, that's step 1. Step 2, where are you with respect to the midpoint? It's not like that. I mean, it's not hard, really. It's the same thing again and again and again. And we've been doing the same thing forever. It's just, in the past, we've had other things on there to help you see the midpoint. Well, it's not exactly the midpoint, but pretty close to the midpoint. And to help you see the trend and all that. But remember, all those sorts of things. But there's ambiguity in this when you use the ribbon. There's a little bit of ambiguity in there, like how much is too much squishing together. Can you really see all the lines and all that? With this, there's no ambiguity. It's either on the midpoint, above the midpoint, or below the midpoint. When it comes out of the overbought or oversold. There's no ambiguity. It's just right there. We have a YBR in Ninja. That's the only thing we have in Ninja is the YBR. Yeah, this thing right here. That's the only thing that we have in Ninja is the YBR. And our Ninja tools, out of the stuff that you see right here, the only one that we have in Ninja is the YBR. You don't have this in Ninja. And you don't have this in Ninja. Look at this. I created them. And no, I didn't create them for Ninja. All right, so I didn't get to the other ones yet. Did I? Yeah, I went through all the markets. We're just waiting for a trade setup now. Nothing here, nothing here, nothing here, nothing here yet. Okay, but I'll break it down for people like that tonight in the partners meeting. Everybody that's not here right now. If I do create this context thing right now, it'll be a little bit of a treat for everybody. It goes to the partners meeting tonight. All right. Yeah, if you go look at some really old stuff back in the YouTube CFRN channel, back to like 2012 or something like that, when we were using the YBR regularly back then. You know, the YBR, by default, the YBR has colors in it. By default, it's got, you know, red and blue in it. And what they mean is that when you get a blue thing, it means price is below the BBC, I think. Price is below the BBC, but everything else is above the BBC. When you get a red thing, it means price is above the BBC, but everything else is below the BBC. It's like telling you that it's pulling against everything else. You know, price is going down like this, and everything else is going up like this. That's what that means. But we don't use it in that way because you don't have all the other things on there anymore. Right, the other things back then would be the MA1, the black step line. I think those were the other things. The MA1 and black step line were above the BBC, while price was below the BBC. All right, so the gold has made it all the way up here. So remember, you're below the YBR, so you're only interested when it goes into the overbought. When it goes into the overbought, you see where it is with respect to the midpoint. It's at the midpoint, so the down close of this bar would be a trade, right? Right, simple stuff. So now, find out where the top is, and you put your sell stop limit 10 ticks away from the top, just like that. Okay. And the top is at 0.1, so that needs to go up to 0.1. Now, the top cannot go above 0.4. Right, the top goes above 0.4, then the down close will be above the midpoint. So any down close, as long as the top is below 0.4, will be okay to take. But if this number right here gets above 0.4, then it's not going to be okay. Okay, but you can see all this ahead of time, right? That always on top. Slide it over here. The high of the bar is 0.1, so we're selling 0.1, 10 ticks below the high of the bar. This may be the only trade that we get in here right now. Wait, these things are coming together. It's got to get into the oversold and then give an up close. So a down close on this bar and an up close on the next one could be a trade on the NQ. Okay, the ES has to go all the way up into the overbought and then come back down. The Russell does too. Right, looks like it just went a little higher. Remember, if it goes up to 0.4 or above, it's not going to be. Well, if it goes above 0.4, it's not going to be a trade. And there it just did. So this is not going to be a trade. You understand why, right? Because if you get the down close will be right here, nowhere near the midpoint, and you come out of the overbought. So you're not going to have a trade. All right, so over here, remember you're above the YDR. All you care about is when you go into the oversold. You're in the oversold. Where are you with respect to the midpoint? You're right at it. You need no close on the NQ. 405.75, I think is what the number is. Here it is. It's going to be 5 points above the low of the bar. So the low of the bar is 425. Okay, so it's not 0.75, it's 0.25. 5 points above the low of the bar. Okay, you see the lows at 400.25. The midpoint is right there at 350. So if you get an up close on this, it's obviously going to be up above the midpoint. So any up close on this bar will work. Okay, and right now the up close is going to be right here at 405. We flipped the YBR over here on the gold. That could turn into a trade. We're running out of time, but that could turn into a trade. We have a minute and a half left. If you get a down close on this bar, this turned into something else now. Okay, so now you got to do the math. Now it's not going to be anything here either. Cancel all on that. It's not going to be anything there either. Those of you guys who are in here right now who were in the morning session, when you have the right Sierra thing fixed, you're gonna have this M on your DOM. You have it on your charts too if you use Sierra charts, but you have this M in the symbol. Okay, so I'll point that out. I forgot to point that out this morning. I think it was in the stuff I put in Telegram. All right, guys. So it doesn't look like we're gonna get a trade. We have 30 seconds left. 30 seconds. This didn't make it into the overbought right here, so this doesn't mean anything. This changed directions on us, but it didn't come from the oversold, so it doesn't mean anything. This didn't make it into the overbought, so this doesn't mean anything. This did, but we're too far down below everything here to get a trade. So, all right, it's Thursday. I keep thinking it's Friday. It's Thursday, guys. No, that's going to wrap it up, I guess. So if you have not taken a free trial with us, go here to mytradingaq.com, click on the purple button. There's no credit card required for the trial. That's going to be into the registration page. On the registration page, first name, last name, email, phone number, down here at the bottom. Give us your TradingView login ID, okay? TradingView login ID. If you don't have one, click on this to go get one. All right? And that is that. That I can pass back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. It is right there on the button.
Okay, recap of the morning session.
Today it took 11 minutes and 4 trades to get to $1,100.
Good job.
Thank you very much.
All right, guys, we left off with gold. We've covered everything but gold and silver. Here's where we opened last night on gold. Now, this is the highest weekly trading zone. We traded briefly above it Tuesday and Wednesday. But I said by close of business Friday, we certainly expect to be at or below based on the last 15 and a half years of history. And so we are significantly below. We could catch a rally tomorrow, who knows? But here's where we open. We're below the BBC, so we're anticipating lower prices. We move sideways, and we drop. We hit the short target. Support gives us a bounce back into resistance. When blue and climbing is directly above price, as it was at this point, it becomes potential resistance because it's on its way to becoming red and falling. So that took us back through the target, and as you can see, we found support at the weekly trading zone, the zone that was published Monday morning at 6:15 a.m. Eastern. Support sends us to resistance. Resistance sends us to support. So we catch another bounce off the zone. Then we consolidate at the zone for an hour and a half, and then we make a drop to the next zone below, where we consolidate for a few hours, and then we drop to the next zone, to the tick. Oh, well, the zone's 33.55/56, and we drop to 55.2. That support sent us all the way back up to this zone at 81/82, where we found resistance, and that resistance has now sent us back below the BBC. Blue and climbing looks like it's ready to roll over and become red and falling. So we very well may see this again, and then this area right here, where red turns to blue. If price gets back down in that area, you're probably thinking, well, I got good support here. Well, it just might come right here. I'd call it 33.64, just to be conservative. And if we trade up through the BBC, this little double top right here is at 33, call it 79. So you could squeak out maybe a 1-point trade. That's $100 per contract traded. And if we get back above this zone, there's just a ton of areas for potential resistance here. So I'd probably look for something different to trade. Okay. And this low is 69. The zone is 67.68. So you got a 1-point area. And that's trading in pretty tight quarters. So yeah, you might want to resist that if you can. So far, we just have a little tiny doji here, but we're only 4 minutes into the life of this candle. So we still got 26 minutes to see what path price is going to take. Every time it's attempted to move higher. This was the strongest attempt to move higher, but again, it ran into resistance right at the zone. See how coming down, the zone was support, all the way back up, resistance. And that's how it's worked for 15 and a half years. Support, support, support. Here we traded through the zone and got resistance at the zone right above. Silver, kind of just some jagged sideways action, but this is where we opened last night. We ran up and tagged the zone overhead at 39.65/66. That resistance sent us looking for support, which we found right here. Now this short target is based off this low. You only need 2 pennies in silver to get your goal for the day. So we almost touched the target. We got a bounce into resistance. Black step line. Above that, resistance would have been red and falling, and above that, the BBC. So that pushed us down to and through the target. And we traded all the way down to here. And if you look left, where we found support on Tuesday, that's where we found support today. Support sent us back to the BBC, the pullback holds more often than not. So we had a leg and a retracement and more consolidation, and then we dropped to the zone pretty much to the tick. Yep. The zone's 38.93/94, and the low of this candle is exactly 93. So we caught a bounce. Now, this candle opened red, but it reversed. What's the low? 38.95. It reversed 1 penny above the zone. And back we go to the BBC. And this is just some sideways consolidation. It's kind of difficult to cross here. But the overall theme of the day since yesterday afternoon has been to the downside. In fact, this high up here yesterday was at 39.91. So to 38.91, that would from here to here, that would be a $5,000 per contract move. When the price of silver moves $1, that's worth $5,000 per contract traded. When gold moves $1, it's worth $100 per contract traded. And when crude moves $1, well, that's worth $1,000 per contract traded. So one last look at the daily chart. High is now 64.1675. So a doji that we had, we put in a slightly higher high. So let's see if we can see how close we can get to it. It's at 18.5. I'm looking for 16.75. Huh. Yeah, it's a real challenge. Here, I'll just leave it at 15.50 for now, and I'll adjust it later. I don't want to take up your time. Remember, the step line's back on the left side of blue and climbing. That's a little unusual. That's based off that strong day we had yesterday. Now look at yesterday's candle compared to today's candle. Again, some might consider this dark cloud cover. It doesn't really fill the bill for me. Basically, we would have had to gap up and then close with a red candle right about right here. That would be dark cloud cover, as I understand it. So we'll see what happens. I don't anticipate a late day rally, but you just never know. And I don't know who's reporting after the bell today, but I gave you guys a website yesterday, earningshub.com. It's a site dedicated to earnings, and you can get a free account or you can get a paid account. I just have the free version just to see who's reporting before the bell, after the bell, that kind of thing. earningshub.com. To become a member, send an email to support@cfrn.net. In the email, just tell Valerie you want to become a member. She'll send you an email explaining everything you get when you become a passport holder, and she'll include a link that you can click to make your payment and become an official passport holder. If you do that today, you'll get an invitation this afternoon to attend the members-only workshop. As a passport holder, you get 2 hours of live interactive training every trading day. You also have access to private one-on-one mentoring. All you have to do is ask. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. The passport holder, you get the Logic 247 alerts around the clock. You get the concierge trade alerts the second they're published each evening, typically 5 minutes before the open. But again, in earnings season, sometimes we see gaps when the market reopens at 6 p.m. Eastern. So last night I put them out after the open. I may just throw them out today ahead of the open, and if whatever happens, happens. Every Monday morning, as a passport holder, you'll get the weekly trading zones, 6:15 a.m. Eastern. Gives you plenty of time to get them on your chart before Wall Street wakes up for the week. Once they're published Monday morning, they're carved in stone for the entire week. They don't change in any way whatsoever. And as a member, every Thursday afternoon, you will get an invitation to attend the members only workshop at 8 p.m. Eastern. That is tonight. So if you send your email now that you want to become a member, that'll give Valerie plenty of time to send you your invitation with the link to attend tonight's workshop. And last but not least, you'll get the golden key that opens all the private channels in Telegram. We got public channels for people on the trial. We got private channels for those who are members. However, in the public channel, you can talk to members in the private channel. It's pretty cool. So you don't have to trust us. You can ask the people who paid their money to become a member, to learn how to trade. And you can ask them things like, how long did it take you? How hard was it? How long did it take you to become profitable? All these kinds of questions that other places tend to not, they don't usually let you mix and mingle with their paying customers. We got nothing to hide, so chat it up. But if you want to be in the workshop tonight, make sure you get that email off to support@cfrn.net. And Valerie will send you an invitation to be in the workshop tonight. Now, one of the private channels is the workshop channel. So once you become a passport holder, not only are you able to attend the workshop like tonight, every Thursday night at 8 p.m. Eastern, but you'll have access to the channel with all the workshop archives. There's hundreds of them in there. You need to watch them all? No. But you can scroll through because there's usually a little caption beneath the video that covers the major talking points of that week's particular workshop. So you might scroll back a week or a month and see something that piques your interest, and you can watch it at your leisure. Everything a trader needs, all under one roof, one low price. It's a good deal. I checked. All right, good word for the day. Compassion begins with the word notice. When Joseph saw them the next morning, he noticed that they both looked upset. Genesis 40, verse 6. Joseph was serving a prison sentence for a crime he didn't commit, which makes it remarkable that he had the time and energy to care about anybody else. Pharaoh's chief cupbearer and chief baker offended their royal master, and he put them in prison where Joseph was. Joseph noticed that they both looked upset. "Why do you look so worried today?" he asked them. And they replied, "We both had dreams last night, but no one can tell us what they mean." Genesis 40. Joseph interpreted their dreams, and as a result, the cupbearer got his job back in Pharaoh's palace. When Pharaoh had a dream no one could interpret, the cupbearer introduced him to Joseph, who interpreted Pharaoh's dream. As a result, Joseph became prime minister of Egypt and was positioned to save his family from extinction. But there is more to the story. From the family Joseph saved came the Redeemer of the world, who saved you. This amazing chain of events begins with 2 words. Joseph noticed. Remember the dying man on the Jericho road? Now by chance a certain priest came down that road, and when he saw him, he passed by on the other side. But a certain Samaritan, as he journeyed, came to where he was, and when he saw him, he had compassion. So he went to him and bandaged his wounds, pouring on oil and wine, and he set him on his own animal, brought him to an inn, and took care of him. Luke 10:31. Jesus ends his parable with these words, "Go and do likewise." Luke 10:37. So, ask God to help you notice and to give you the grace to respond. That's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.